Welcome back, everyone. This is Mo Investing, and we keep things short and sweet, so let's jump straight in. Now, Amazon is one of those companies that hasn't moved in the last year. It's been pretty flat, but it is one of the most diverse companies in the entire world. So, if we look at their key revenue sources, they have their first party online sales as their main revenue generating source, but it is pretty low margin compared to other businesses like AWS and advertising. But the other key revenue sources they have is their third party seller services as well on their online store. They've got their memberships and subscriptions, such as their Amazon Prime membership, as well as Kindle Unlimited and others. They've also got AWS, which is the largest cloud provider in terms of market share, and their advertising business, which is growing quite well. Now, if we jump into some of the numbers, Amazon's current market cap sits at 2.6 trillion. Their trailing 12-month PE sits at 28.9, next 12-month PE at 27.2, and 2027 PE at 24.3. Their operating margin is at 11.5%, and their price to sales is at 3.55. Now their cash sits at 143 billion and debt at 119 billion, and then the stock price sits at around $250 at 245 as of the recording of this video. If we jump into some of Amazon's strengths, they're a very diverse business that's competing at a high bar across many different sectors. Namely, they're the leading online retail store as well as being the largest cloud provider right now. They're also seeing re-accelerating growth in AWS as well. They're seeing 28% year-on-year growth in the last quarter, which is the fastest in 15 quarters for them. They're also unmatched in terms of logistics and fulfillment, providing a very high quality service in terms of convenience for customers on their online store. They're also seeing rapid growth in their chips business. We have the CEO of Amazon, Andy Jassy, saying, quote, "If our chips business was a standalone business and we sold chips produced this year to AWS and other third parties, our annual run rate would be 50 billion. As best as we can tell, our custom silicon business is now one of the top 3 data center chip businesses in the world, and the speed at which we've gotten here is extraordinary." So I don't think he's saying these words lightly. If we take the 50 billion run rate at face value, that would make their revenue from their Amazon chips business alone larger than AMD. Now, taking a look at some of the risks for Amazon, the main glaring one is the capex spend. So the market isn't really sure if the ROI on this capex spend is going to be justified. And they're also competing with the other cloud providers, and they might just end up eating away at each other's profits in this case. Amazon also within the retail segment always carries the risk of consumer and macro cyclicality affecting revenue over there. Now, if we take a look at their latest earning report, Amazon reported net sales increasing 17% to 181 billion in the latest quarter in comparison to 155 billion in the same quarter last year. They also reported growth across all segments. So their North American segment sales increased 12% year over year. In their international segment, sales increased 19% year over year to 39.8 billion. And then AWS reported very good growth, increasing 28% year over year to 37.6 billion. Their operating cash flow also increased 30% to 148 billion in comparison to 113 billion in the same time last year. In terms of outlook for Q2 2026, Amazon expect net sales to come between 194 billion to 199 billion, increasing 16 to 19%. Operating income is expected to come about 20 billion to 24 billion versus 19.2 billion in the same quarter last year. Now, if we jump into valuation, and I'm going to use analyst estimates for this, analysts expect earnings per share to come in around $18 by the year 2030. So that would mean around 22% CAGR. Now, I'm going to be more conservative than this and set our EPS growth rate to 15% with an exit multiple of 30. And you can see here that our return by the year 2031 could be around $500. So this would be my base case for Amazon, and I think it'd be pretty realistic for them to achieve this. Now, for rating, I'm going to give Amazon a rating of 5. I think it's one of the best businesses out there, very diverse, and they will be around for a very long time. And in terms of verdict, I'm going to give Amazon a buy. They maintain growing at a very solid pace at their large scale, and they're not limiting themselves. They continue to explore opportunities and reinvest heavily in the business. So I do see them continuing to grow into the future. And that's it for the video. Thank you for watching, and I'll catch you in the next one.